Hi there, welcome to Kneppy Invest. I think it's time for another technical update video, the first of these in 2 weeks, because last Sunday I did a portfolio update because it was the end of the financial year and I thought it was time I gave that sort of video. So I think it's time to have a look at the state of the markets, the indices around the world, particularly focusing on Australia and United States. And then we'll have a look at the commodities, some interesting movements in some of those, particularly gold the last few days. Actually, particularly copper. Copper's had a couple of really good days. And so we have a look at a few of the commodities. And then we'll have a look at Bitcoin. Bitcoin and Ethereum had a bad week. So cryptocurrency, bad week if you're heavily invested in those. And then we'll have a look at the bonds. And then we'll have a look at stock specific charts. And what I'll do in that portion of the video, I'll go through three of my screeners, 3-month high. We have about 100, 220 companies on that particular screener. Then we'll have a look at unusual volume, and then we'll end the video having a look at moving average cross. So 50-day crossing over the 200-day moving average, and that is one of the screens I look at every single day because typically there are new companies on that particular screener every single day. In the 3-month high, even the unusual volume, sometimes you see the same companies over a number of days. So I do like to look at that particular screener, the crossover on every single day. And what I also do, and you'll see that when we look at those companies, I put a cross when we also get that crossover. And that could be either a positive or negative cross, like a golden cross. And what's the other one called? There's a golden cross and, oh, what's the other one called? Golden cross, and dead cross, something dead cross. So the golden cross and opposite, maybe I need to say opposite. Death cross, yeah, golden cross and death cross. So I'm particularly focusing on golden crosses because death crosses are the nasty ones, the worst ones, the ones you don't want to see. Anyway, so let's start off this video, this technical update video, looking at indices, starting with the XJO. And to be honest with you, nothing much has changed since the last time I did this video. In fact, I'd say we're in a holding pattern right now, going sideways over the past 4 months. In fact, if you look at the monthly chart. Don't usually do this, but the monthly chart, yeah. In fact, actually 3 up months in a row after a big down month, 2.95%. What would that was April. Let me just decrease that. That was, yeah, April, down 2.95%. In the last 3 months, we've been up 0.5%, 0.85%. And in this particular month, which has only been going for a week, up 0.71%. And you get a good sense of the XGO just by looking at the monthly chart. Generally, the indices go up through time, and that is absolutely true. You can see the GFC back here, and we are now well above the GFC tops. But let's go back to the daily chart. But if you just look at the daily chart, we're just going sideways, in a sideways holding pattern. Important levels here for the XGO is around about 7,560 or so. If we fall below 7,500, that would be really negative. That would be fairly bearish because since the start of the year, or since the start of February, we have tested 7,500 twice, and we've seen really good rallies after those testings. And on the top side, the important level here is about 7,900. Eventually, we're going to get above 7,900. That's an absolute certainty. Just don't know when it's going to happen. Just like eventually we're going to get above 7,000 or 8,000, and eventually we're going to get above 9,000, and eventually above 10,000. I can't say we're going to get below 7,500. That's not a certainty. It may never happen. We could go on a massive bull run from here, and after that bull run, which might last 5 years, who knows, and then we might have a correction, and that correction could go down to 8,000 or 7,600. It may never go back to 7,500. That's the important thing to know and remember about equity markets. Over time, they go up. That is one certainty. They do see, on occasion, fairly big drops, but over time, they go up. And that's the best thing about being long-term investors. You know, generally, if you hold a quality company for the long term and you get in a good value, then more than likely you are going to make money. Anyway, so the XGO in a holding pattern right now, and I think eventually, whether it happens this year, we're going to see it get to 8,000. That's I think a fairly important psychological level. Round numbers again, fairly important psychologically. Now, I can't say the same thing about the small caps. Funny enough, I had a look at what's the small cap? What's a small cap ETF? Is it XSS? Small cap ETF. ETF ASX. What is it? QSML. I just want one that tracks the XSO. That's right. That tracks the XSO. So SSO. What the reason I wanted to have a look at the SSO, I just want to have a look at the biggest companies within this particular index, or this particular ETF, or that particular indice, the small caps. So this, if it tracks the XSO, you should be able to see what companies influence the small caps. And what I found really interesting thing about this particular small cap indice is some of the companies and the size of the companies within this particular indice. TLX Pharmaceuticals, that is considered a small cap company. That company has a market cap of $6 billion. I don't consider that company to be small cap. We also have Paladin, Illumina, CSR, Sandfire, Viva Energy, Hub24, Webjet, Perseus Mining, and Life360. So those are the 10 biggest companies by holdings in this particular ETF. And you assume that those companies are the 10 biggest companies within the small cap index. However, in saying all that, and the whole reason I went through this, I just want to see the biggest companies. And a lot of these companies are actually performing quite well. TLX doing really well. Hub24 doing really well. Even Webchat's in a nice uptrend. Perseus is doing well. Life360 is doing really well. But when you have a look at the XSO, it's struggling. It's really struggling, particularly since April. In fact, I'd say right now it's in danger of moving into at least a short-term downtrend. I wouldn't actually say that right now. And it's just above a very important level. That important level is right there, sort of that zone there. So if it drops below 2,940, that would be fairly bearish. But again, I think over time, this will get to new highs. But if you do look at the monthly chart for the XSO, we still haven't got to the tops we saw in 2007. So still well short of those highs we saw back then. So small caps on the ASX have been struggling. And I would assume one of the reasons behind that is if a small cap company is successful and it's going to grow, eventually it will be moved out of the small caps into another indice, because the best companies will move higher. They will not be considered small caps anymore. So that's probably one of the bad things about the small cap portfolio is the best performing companies in this sector, this indice eventually will be moved out because they've performed so well. And then all you're left with is the worst performing companies. That's another thing to take in mind as well when you're investing in small caps. Some of these companies will eventually grow to be big cap companies. That's the goal of buying these small caps, hoping for that big cap company. Pro Medicus, perfect example. Okay, so let's go back to the daily chart and let's go to the American markets. So let's compare this small cap indice, small ords, to the Russell 2000, which is a small cap proxy. In fact, they say US small cap 2000 index, so the Russell 2000. So in a way, it's even described as a small cap indice, and it's not that dissimilar to the small cap or ordinaries in Australia. If you look at the monthly chart, it is significantly different. So this is in a beautiful uptrend over time. So this is going back 25 years. This is exactly what you want to see. And compare that again to the XSO. Not quite the same, is it? So definitely small caps in the United States are performing much better. And I'd say many of the small caps in America are significantly larger than some of those companies that are considered small cap in Australia. But doesn't quite compare to the NASDAQ, does it? So let's have a look at we'll go back to the daily chart for the Russell 2000. And if you just look at the daily chart, it's not doing much. Probably not as negative as the XSO, but still not doing that amazing. But compare that to the NASDAQ. Look at the NASDAQ. And if anyone's complaining about the NASDAQ, unless you're short on the NASDAQ, those are probably the only complainers. 3 really good days at the end of the week. In fact, the whole week, the Nasdaq was up. I'd say about 2%, maybe. 3.6%. I've been a little bit off, up 3.6% after two flat weeks. The Nasdaq was actually down one week by 0.1%, up the previous week by 0.2%. After another good week, up 3.5%. So you have a look at the weekly chart here. Nothing to complain. And the daily chart, nothing to complain about. Beautiful uptrend. You can see a couple of buy the dip situation or opportunities here. The last one was in April. Before that was in October last year. And then have a look at the monthly chart. And in fact, eventually you need to look at not the exponential, the logarithmic chart, because you got that perfect acceleration in the prices on the linear chart. Which you're gonna, by definition, eventually you have to, if you look at a longer time frame, you have to look at a log chart by definition. So if you zoom out, you just see there's no context here because it's a linear chart. So if you look at the log chart, go back to the log chart. Yeah, this is exactly what you should see. Beautiful. So the Nasdaq has been an absolutely brilliant indice over the past, this goes back 40 years. It's gone from 140 to 20,000 in 40 years. There's no comparison between the best American companies and the best Australian companies. There's no comparison. These are the best companies in the world. I'd say the vast majority of the best companies in the world are listed on the Nasdaq or the New York Stock Exchange. There's a pitter patter. That's not the right word. There's a small amount of other really good quality companies elsewhere in the world, particularly some drug companies I'm thinking of right now, Novo Nordisk. But the vast majority of quality companies are listed on the Nasdaq or the New York Stock Exchange. I've had rants about why that is so, why talent around the world tends to want to gravitate towards the United States because they're more encouraging of innovation over there. We try to say we're encouraging innovation here, but that's not absolutely true. Okay, so that's the American markets. Oh, no, it's not, because Dow Jones Industrial Average, not quite as good as the NASDAQ, but probably better than the Australian markets. And what about the Nikkei? Oh, Nikkei, right on the all-time high we saw reach back in March. This chart looks absolutely brilliant as well. Maybe there are some really good high quality companies on the Nikkei 225. And yeah, well, back in 1990 or the late 80s, some of the biggest companies in the world were on the Nikkei. And that all changed in the 90s. What about the DAX? Let's have a look at the DAX. DAX better than the Australian markets? Yep. And what about the FTSE? Better than the Australian markets. So right now, the Australian markets look the weakest out of all of them. Yep, I'm saying that. The Australian markets look the weakest out of all of them. And what about the Hang Seng? Hang Seng, this actually looks weaker. Hang Seng stock, I don't know what this Hang Seng stock connect China 500 index is, but anyway, that looks the weakest probably out of all of them. Hong Kong is still struggling. Okay, so let's have a look at some commodities. And we'll start off with gold. And gold's had a couple of good days. In fact, I'd say it's had a good week. So gold's up, gold up 2.8% for the week. I think this is just a bit of a consolidation phase. This is exactly what you want to see after a really good rise. I put a level here which we didn't want to see broken. That was about 2,280. It hasn't broken that, and I'd like to see gold get above about 2,440. That would be all-time high, just above that. So it's moving in the right direction. So nothing to be nervous about when it comes to gold. Still honing a few gold companies in my portfolio, just a few, but not many. And let's have a look at copper. Copper has had a really good week, particularly the last 2 days, up about 2% each day. In fact, on Wednesday, this is only Wednesday, Thursday. What happened to Friday? On Wednesday, up 2.6%. On Friday, up 2.6%. So really, there was no trading in commodities on Thursday. I did not realize that. Is it the same thing for gold? No, they had trading. I don't know. That's interesting. Maybe it's the exchange COMEX. Okay. Okay. So gold's had a really good week, hasn't it? So copper up 5.9%, and I still hold one copper company. That's Hillgrove Resources, and I don't think Hillgrove Resources has done much. Fun enough, the T code for this copper futures is HG1, and HGO is Hillgrove Resources. So no rally. So I would have expected the chart for Hillgrove Resources to look much better. They've just gone to production. They've released a couple of really positive announcements in terms of their increasing production, now cash flow positive, but the market's just not want a bar of that. So still a little bit of negative sentiment in this company for some reason. Nickel's had a bad few weeks, hasn't it? Bad few months, in fact. It's gone down significantly the last 2 months. Yeah, so not quite as good as it was. There are a few nickel companies. I think Centaurus Mining. Yeah, and Nickel Industries, NIC. And that's sort of, yeah, that's sort of what we see on the nickel uh, chart as well. A nice rise and then a fall. Oil had been looking good and still actually doesn't look awful. But one thing you have to know about oil, it doesn't or hasn't moved much. Well, there was a massive drop in oil back in 2020. Wish we could get rid of that. But if you go back in a long time, oil really hasn't done much since the early 80s. It's gone from $31 a barrel to 83, which is not much of an increase over about 40 years. Yeah. So I don't expect much increase in oil over time, to be honest with you. And that's one of the reasons why among the top, the ASX 20, I would consider Santos and Woodside, even though I keep getting messages that Woodside is not only oil, it's also gas, which is true. But I would consider Woodside and Santos to be two of the lowest quality companies in the ASX 20. But they do beat Telstra. I do consider Telstra to be the worst quality company in the ASX 20. That's just me. And there are reasons behind that. So oil is looking okay short term, but long term, you just see it's just there is volatility there. Silver, well, silver should have had a good, yeah, silver's looking really good, and it's had a really good bounce off the really important level at about $29. It broke out above that back in May. It tested it a couple of times, and has taken off again. Which means the biggest silver company is Adriatic Metals, which is now, I think, a producer in Croatia, I think. And I did have a look at this chart, and this chart's doing the complete opposite. So it's going down. So I'm not sure what's happening here, why there is a detachment from Adriatic Metals performance versus silver. Something's happening probably with this company, and I don't remember this company releasing any news. Let's have a look. I could be wrong. Adriatic Metals news flow, nothing in the last month, last 3 months. Just an equity raising at the end of May, and I think that's why the share price dropped. There was a big drop in May. You go back to silver. Was there a big drop in silver in May? Oh, that wasn't. No, that wasn't massive. It wasn't a massive drop. What else? Coal. This is Newcastle Coal, and we've seen a lot of coal ASX coal companies go on a run. And I was trying to find another coal future or index, whatever you want to call it, that could have shown that reason why the coal company ASX coal companies have gone on a run. I haven't found it because when you look at this particular chart, nothing too exciting there. But have a look at some of the coal companies, and we'll have a look at some of those coal companies when we look at companies at a 3-month high. They feature quite prominently in that particular screener. So we got at least, I'm thinking at least 4 coal companies in that screener. Natural gas here. Still nothing exciting about natural gas. And iron ore. Iron ore, of course. Always have to look at iron ore, and a lot of volatility in iron ore at this point in time. It's up and down like a yo-yo. And this goes back to February 2023. and it's been happening probably even longer than that. Just up and down like a yo-yo, no trend at all. Any significant trend when it comes to iron ore. Have a look at the weekly chart. And even then, there's no trend here. There was a nice trend back from 2018 to 2022, but that trend has now come to an end just by looking at this. It's just up and down. You can just see this by all these crossovers. The moving average crossover is marked by these crosses, yeah. And it's been a plethora of those, 5 of those in the past 18 months, which means the market's just going sideways. When you see a lot of these crossovers, market's just going sideways. And lithium, don't even have to look at lithium. Yeah, ugly, 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 ugly. Well, not really that ugly because I'm not sure how low it has to go, lithium, but it's still dropping, slowly dropping. Okay, so that's the commodities. I can't think of anything else. Maybe palladium. We'll have a look at palladium. Where did I put palladium? Oh, there it is. And tin. Let's have a look at palladium and tin. Palladium. Oh, palladium. So that's the weekly chart. Downtrend. Obvious. Nice uptrend from 2017 to 2022. Look at the daily chart, and palladium still in a downtrend. But I think the downtrend might be coming to an end just based off what we've seen over the past 7 to 8 months. The low was in February. The most recent low didn't get below that low. That was in June. So possibly a consolidation phase for palladium and possibly moving into an uptrend in the future. Cocoa's been all over the place, a lot of volatility, which probably hints that the top has been reached. And was a beautiful chart from December 2022 through to the high in April. And tin. Nothing wrong with tin. This is actually pretty good. Probably my favorite tin player would be Metals X. And Metals X, yeah. Oh, it's had a nice bounce. All right, so let's have a look at Bitcoin and Ethereum. Had a bad week, pretty bad week, and we have seen it bounce. So Bitcoin down, let's just zoom in a bit. Bitcoin down 7.24% for the week. I would say Ethereum down even more than that, 10.7%. But we sometimes do see this volatility. The most important thing, when you look at the daily chart for Bitcoin, we have seen it bounce. That was on Friday's session, and that's actually, what do you call that, a hammer? Is that a hammer? Hammer candlestick. Hammer candlestick. I need just an image. I don't care. There it is, hammer, where you have this long, they call it shadow, yeah. So you have the body and a long shadow below the main body. That's a hammer. And typically it's positive. And according to Investopedia, price pattern in candlestick charting that occurs when a security trades significantly lower than its opening by rallies. It doesn't say if it's bullish. This one here, Light Finance, sort of implying it's bullish. Yeah, it's pretty bullish. The other one is inverted hammer, but this is a hammer. You can just see it here on Friday's session. There's a long shadow and you've got the main body, which means there's a lot of buying coming in, forcing the share price higher. Or another way to put it, the enthusiasm of the buying is greater than the enthusiasm of the selling. That's why the price rises. And that sometimes does signify a bottom. So that could be a bottom for Bitcoin. And then we have seen the price of Bitcoin rally on Saturday's session, up 2.86%. Do we see the same signal with Ethereum? Not quite as strong, not quite as strong. And the last thing I want to look at is we'll have a look at the US 30-year bonds. And yeah, I'm saying there's no trend. The bond market is confused. Bond market doesn't know what's going to happen with interest rates. No one knows what's going to happen with interest rates. Some people think we're going to have like 3 interest rate rises in Australia over the next year or so. I think maybe some of those people are wishing that's going to happen. But I struggle to see why the Reserve Bank would raise interest rates. I do think that would be a significant mistake. I think this little blip, this little rise in inflation was just a blip. And I think in another month, we're going to see inflation come back down. And I don't think they will overreact. I'm hoping they won't. This country, interest rates are at this point high enough. High enough. That's just my opinion. And yeah, there's nothing, no trend in bonds right now. Okay, so let's have a look. Let's do my screeners. Let's have a look at some individual companies' charts. We'll start off with the 3-month high. And fun enough, that we're all right on that. And let's start off, and this is ranked by market cap. And one of the largest companies on the ASX is at a 3-month high. That's CSL. And I have taken a trading position in CSL right now. Also hold a longer term position. And I think eventually we will see CSL go on a pretty good run. It might be now, it might be another year from now, it might be 3 years from now, but eventually it will go on a run because this company is still growing and it's growing at a really good rate for the size. But the share price has done nothing the last 3 or 4 years, consolidation phase. So it's gone through financial expansion, but multiple contraction. And eventually, when a company goes through that period, eventually it will go back to multiple expansion. Uh, More than likely it will, because if it keeps expanding and if in fact it keeps on growing at a greater rate, then I think this company looks attractive at current levels. So just below $300, and even the chart looks okay right now. It looks like it might be wanting to move into an uptrend. How long that uptrend lasts, I don't know. We have Aristocrat. This chart, a PE ratio of 21.9. You can buy Aristocrat now at a lower PE ratio or low PE than CBA. That's a no-brainer for me. Some people say, "Well, what about CSG or ESG issues with Aristocrat?" I'd say, well, the banks aren't saints themselves. In fact, I could actually have an argument that the banks are more morally and ethically corrupt than Aristocrat. And I would definitely prefer to buy Aristocrat over the banks right now, particularly CBA. CBA has a PE ratio of 22, 23. That's ridiculous for a company that's not going to grow at all over the next 5 years. I'm not the one saying that. The CEO said that in regards to CBA. He said the growth phase for the company is there's not going to be much growth. I'm going to paraphrase. He said there won't be much growth for the company, but we're a safer company. And that was his selling point. We're a safer company now, but we're not going to grow all that much. And for some reason, people keep buying CBA because they think it's safe. But at some point, you have to look at the PE ratio. You're not going to see much return when you buy a company that's not going to grow all that much at a high PE ratio. Aristocrat's growing. And then we get to some coal companies. So we have Yancoal, nice looking chart. We also have Whitehaven, nice looking chart. I'd say that's almost a breakout. Yes, I'm going to call that a bit of a breakout. We also have Stanmore Resources. Looks okay. I think I prefer Whitehaven. I think Yancoal's rallied a little bit much. And the only one we're missing is New Hope. And New Hope, for some reason, the market just doesn't like it. I don't know why. Yeah, for the last 2 days, share price of New Hope has pulled back. But if I was buying any of these, I don't know. Not sure. I don't know. We also have GQG Partners, just a beautiful looking chart for that company. Macquarie Technology, another beautiful chart. Share price keeps on rising. Resolute Mining. So this is the first of a few gold companies. This looks pretty good as well. And we also have Westgold just coming in behind Resolute, and probably not as good as Resolute, but is that really a 3-month high? Yeah, it is, because this little high back in late March was just over 3 months ago. Clinuvel. I think I talked about Clinuvel in my daily wrap-up, or ASX daily wrap-up video. They released an announcement on Friday. Share price rallied a lot. My only concern about Clinuvel is we saw another little rally back in August last year. You can see this nice little rally, and the share price just collapsed. I think this is a better rally. We don't see the volume for some reason here. I think this is a better rally. I'm not absolutely calling this a breakout just yet. I need confirmation, but this is a good sign moving forward for Clinuvel. Then we get Pantoro, another gold producer. This chart looks pretty good. I like this chart as well. Definitely shift in sentiment and a trend over the past 3 or 4 months. PYC Therapeutics. I don't know much about this company, but it has a market cap of 581 million. And the chart looks okay. There must be a lot of shares on issue. In fact, I can tell you right now, shares on issue, 1.43 billion. I actually expected a little bit more than that. Red Hill Minerals. This chart looks really intriguing to me. And then I had a look at the company. They're doing a capital return. Probably right why the share price has rallied. Red Hill Minerals. I've never heard of this company before, but it has a market cap of 500 million. Bell Financial Group. I actually am a shareholder of this company, and yeah, I share price going sideways, but I just need the share price to get above about $1.45 to me get more excited about that. Sovereign Metals chart looks pretty good. Then we have Aspen Group, Aurelian Metals, Austin Engineering, Horizon Oil, Schaefer Corporation, Aroa Biosurgery. Yeah, is this the breakout for Aroa Biosurgery? It's starting to look better, but I'm not quite there. Not quite there just yet with this company, but it's starting to look a little bit better. Frontier Energy. This keeps popping up on my radar because of this chart. They do renewable energy, I believe, in Western Australia. Had a very quick look. Bisalloy Steel. This chart looks brilliant, doesn't it? Beautiful looking chart for Bisalloy. Euros, Hartleys. FBR has just popped up because of the last 3 days, but I'll talk about FBR later. Titomic had a brilliant day on the last day of the trading week, and that chart looks pretty good as well. And then we've got Airtasker, Theta Gold, Intelligent Monitoring Group. Breakout alert. Another company that has broken out. So fairly similar to what we saw with Titomic. This company has a fair bit of debt, however. That's probably the only negative thing I can think about this company. Imricor Medical. Yeah, I probably would be. I'll probably be not against, but not excited. Pioneer Credit. Okay, I am going to talk about Pioneer Credit now. This will be the last company I talk about in this particular screener. Just going through some other companies. Yeah, this will be the last company I talk about in this particular screening because I want to spend a little bit more time on Pioneer because I have taken a position in this company. And I just want to thank Luxy6503, who wrote a message about 1 month ago talking about Pioneer Capital. And this person mentioned a few things. It's not my favorite sort of company. They purchase debt portfolios, that sort of thing. Currently organizing an SNR debt refinance, have improved collection margins, a return to profitability. Samuel Terry recently purchased a roughly 15% stake in the company. They're trying to get to around $20 million in profit in financial year 26, which will render the forward PE ratio very low currently. Momentum seems to be building. So I had a closer look at the company and I went, this is my favorite sort of trade. Company that is looking really cheap. And if they do turn things around, the share price could go on a massive run. And I was just waiting for a little bit of a pullback. So I've been looking at this company for a while. So I got my pullback on Wednesday at 47.5 cents. There was a pullback the day before. I saw that and I went, ooh, I'll take a position if I can get it at 47.5 cents. And I got in at 47.5 cents and I'm already up over 10%. And the share price had a nice rally on Friday. Was up, yeah, up 7%. And yeah, so this is one of my favorite sort of trades. And I have read research on this in the past that the best returns when you do use a trading strategy is also combining value, looking at turnaround stories or breakouts by companies that are cheap. So I'll try to find that particular research, that paper that I did read, and it sort of makes sense. It does make sense that if a company that is cheap, and particularly if it's more of a higher quality company that is cheap, and maybe there's some issues, short-term issues, share price falls, even if it's not a high quality company and it's turning around. A perfect example right now could be Integrated Research. Integrated Research has had problems over the past 3 to 5 years, maybe even longer than that. And I think it's starting to turn around. There are signs it's starting to turn around. So if you have a look at the longer term chart, long-term downtrend. In fact, it moved into a downtrend back in December 2020. Share price reached a high of $5 in 2020. A lot of negative sentiment around this company, having problems, and it seems like potentially the company is now coming out of those problems. And it was looking really cheap, down at 30 cents. I was following this company waiting for that breakout because it looked cheap as dirt. Gentrack is my favorite example of this. Perfect example of finding how it looks really, really cheap and just waiting for that breakout. So this company was a beloved company back in 2017-18. Share price got as high as $6.50. Had some problems starting in 2019. Share price fell all the way down to 76 cents in 2020. It rallied a little bit. Wasn't doing much from 2020 all the way through to the end of 2022. But the share price broke out. On news, the company was starting to turn things around. And there were signs of that. And that breakout was in November 2022. So not even 2 years ago. And share price on that breakout was $2. Share price now $9.39. That is a perfect example of what I'm looking for. Company that looks really cheap because of some more short-term issues, maybe medium to short-term issues. And if the company can turn around, you get a significant payoff. And that could be true for Pioneer. So back to Pioneer. Let's have a look at the longer-term chart for this company. Go back, longer-term chart. So long-term downtrend. Share price as high as 360 back in 2018. Now maybe they've done a few couple raisings, so if share price gets back up to those levels, the market cap of the company will be significantly different. You can see the problems the company had during 2020, which is understandable. But even then, share price hasn't really rebounded. It's been in a downtrend ever since then. I haven't seen it cross. Haven't seen one of my crosses here. So the downtrend really started in 2018. That was my sell signal if I was using that cross. And we got a buy signal using that cross in December at a share price of 35 cents. And since then, the share price and the chart is looking really good. So this is one of those potential turnaround stories. And if this plays out, and if they can achieve their goals, who knows how much higher the share price can be right now. This is the sort of company I'm looking for when I do a longer term trade. Anyway, that's Pioneer Capital. And the rest of the companies on this list, so that Pioneer Capital's market cap right now is 71 million, and it has a lot to grow here. A few other companies on this list I won't go through. I'm just going scrolling down it. Some really interesting, like Hytera. This looks really interesting, doesn't it? So this is white hydrogen in somewhere in America, like Utah, Wyoming, somewhere like that. And I think I'm going to end it right there. And Oric, saw Oric there, which is understandable. I am trading Oric right now, Oric Mining, AWGJ, and that looks pretty good as well. Okay, so that's 3-month high. I'd also like to look at unusual volume, but I have an extra filter in this. I'm only looking at unusual volume where the share price has rallied a fair bit, I believe. Oh no, I don't have that now. Oh no, 3-month high. So this is a filter where it's unusual volume, but also 3-month high. So I'm looking for a breakout on unusual volume. That's what I'm looking for here. So only 24 matches. So we have the Clinivel, which sort of makes sense, but also has not necessarily breakouts that I'm looking for. So Pentora had high volume, but it wasn't necessarily a breakout. So I am looking for breakouts. And Clinivel was the prime example of a breakout. You could say Titomic as well, but that was on no news. I'm looking for breakouts on news. Like we also have Intelligent Monitoring Systems here, or Monitoring Group. That's a potentially breakout. And Pioneer Credit, it also features here. That's also a potential breakout. But my definition of breakout is on positive financial news. That's what I'm looking for. Okay, so there's that. And then we also have Oric Mining. That was on positive financial news, wasn't it? So this is potentially a breakout for Oric Mining. And the last one is the 500, 200 MA cross. I don't think there's anything else. That's the only filter I have in this. Only 8 matches. So this is one where you're going to see the matches change every single day. You won't have the same company popping up on this particular list. So the first company on this particular list is Gold Road Resources. And I don't know if I would necessarily like that one. We have FBR here. So nice little rally the last few days. This does look like it's trying to turn around, doesn't it? It's trying, but not necessarily will trade that, because I think, not sure why the share price has rallied the last 3 trading days. No news flow from the company. GTN. You can see when a share price is going sideways, you get a lot of these matches. And this is another case. In fact, GTN has had 3 matches the last month. In fact, less than a month. Share price is going sideways. You're going to get that sort of thing. So false signals there. Midway, probably a negative one. Yeah, so I'm getting, this shows you all the positive and negative. So this is a crossover to the downside. And Lovato, this is probably my favorite one out of the lot. Yeah, not many others below this one. Markup of 32 million. I just like this chart. I just like how it's playing out. So Lovato. Okay, that's all I got for this video today. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.